took a brief look at some of the activity we've seen in the equity space. This, though, is happening in a context where we've got the Central Bank of Nigeria set to make its decision on interest rates today. Broad expectations are for the Central Bank to keep rates steady at 6%. What is your forecast?
Hi, Alishia. I think that there's a general consensus that interest rates are going to remain flat today. There is nothing from a macroeconomic point of view that will prompt the MPC to increase or drop the base interest rate. Money supply numbers continue to remain positive. Bank lending as well has started to show some bit of recovery, albeit to the prime sectors of the economy. It's obvious that the CBN's plans as well with regards to inflation trends continues to remain on course. We're currently doing inflation at about 11%, and it's tended to trend downwards in the last 3 to 4 months. The reality is that there's nothing really right now to suggest that we're going to have a sudden increase in money supply numbers, which might necessitate the central bank increasing interest rates. I actually believe that the focus will continue to be on inflation targeting. The central bank continues to target single-digit inflation, even though it's not something we've been able to achieve in the last 24 months.
Yeah.
I think the key for us is if we continue to see deregulated fuel prices, then there's likely to be no major push to inflation on the upside.
Well, we've got inflation at this stage sitting at 11%. That came in year on year in May. The major reason for keeping rates stable has been the need to stimulate economic growth, and that for now outweighing the fact that we've got inflation risks in sub-Saharan Africa's #2 economy. Femi, there are risks to inflation to take into consideration, though, given the fact that we've got hefty government spending that's currently underway and the soaking up of bad bank loans as well. So let's take a look at some of the risks that do sit on the horizon.
Yeah, absolutely. I mean, there's several risks, actually. And in addition to the ones you just mentioned, there's still the concern around fuel prices, on whether government will deregulate or not. The reality is that if government does deregulate, we're expecting to see a 30–40% jump in fuel prices. That in itself will definitely throw inflation way out of target. We think that could actually seep into inflation numbers another 8–9%. So we could be going back into the 19s if we do see deregulation. The truth is that it's unlikely that would happen, especially as we go towards an election year. I also think that on the flip side, the current government is enjoying significant goodwill, which means that it's probably the best time for us to see some form of deregulation of the oil and gas sector. In addition to that, you mentioned the issues around government spending. The reality is that government isn't as buoyant as it was last year. There are concerns that the budgeted numbers would actually drop by 40%, which means that you're taking a whopping 1 trillion naira out of government spending, which for me is positive because it means that from a fiscal point of view, the risks to inflation are significantly subdued. At the end of the day, the central bank will continue to focus on growth. Growth has been positive in the early parts of the year. However, I always caution that when you look at GDP numbers in Nigeria, agriculture seems to be a large chunk of our GDP, and to a large extent, it masks recessions in other sectors of the economy because of its sheer size. I believe that the central bank will continue to err on the side of growth and ignore inflation in the short term. But also don't forget that ignoring inflation in the medium term could totally dislocate whatever growth expectations that the market has.
Yeah, well, added to all of that, the market is also set to be watching out for any comments from the central bank about the country's declining Forex reserves, which have fallen steadily since January. It's sitting now at just above $37 billion. I mean, what's your view on where we're headed and the risk that this poses moving forward? Because certainly if the oil markets don't improve, we could well be facing a very serious problem here.
Facts, Alishia, you know, and for me, that's probably the biggest concern right now. We continue to support the Naira. Well, the Naira continues to trade at a tight band between 148 and 150. And we've seen, you know, our external reserves drop, as you said, from about 60 billion to 37. And the trend continues to look like it's going to keep going downwards. I suspect that at some point, something has got to give. There's a possible devaluation of the currency in the horizon. And I'm sure that if you put the CBN governor in a room, he will tell you that they will defend the currency with everything they've got. But I think at some point, with foreign reserves continuing to drop sharply, there will be a need to actually take a decision on whether to devalue the currency or not. Now, if a devaluation does occur, in the unlikely event that it happens, that also has a direct inflationary impact on the economy. So you've got to balance all these things. I wouldn't envy. I don't want the job of the central bank governor right now, because the challenges that he has fixing the banks on the one side and ensuring that he can maintain some level of macroeconomic stability without having any control on the fiscal measures that government is able to take has to be a challenging task for anyone.
Yep, certainly many challenges that persist over on the Nigerian front. Let's move away from the macro picture then and focus in on the banking sector specifically, because at the moment we've still got economists, shareholders and financial analysts disregarding the kind of numbers we've seen out of the troubled banks with regards to their Q1 profits. They're a bit skeptical about whether or not this is going to be sustained moving forward, and huge question marks around that persist at this stage of the game. Just where are your confidence levels at right now?
Banking sector confidence levels, I would say, not significantly different from where we were 12 months ago. I think the only difference now is the numbers that are coming out of the banks are believable, because we believe that, look, from an internal point of view, they've been able to fix some of the corporate governance issues that we had in 2007, 2008. However, in terms of where do we see the banking space itself going in the next 12 months, I've always said that, look, the Nigerian banking space isn't going to see any aggressive growth for the next 12 months. And the 12 months for me ends in December of 2011. I think it's still house cleaning time for most of the banks. A lot of us analysts believe that, you know, the entree of the asset management company into the mix would significantly improve the fortunes of the banks. You know, and I think that is discounting the fact that, you know, the asset management company isn't going to buy these loans at par. So you're not actually going to see a significant recovery in capital numbers for some of these banks. The implications, therefore, is that unless the central bank is able to get those banks off the sick bay, and they've been there for too long now, we're counting 12 months by August 14th, then you continue to see increased, decrease in confidence levels for the banks. So the issue for us is that things have to happen very quickly. Don't expect stellar numbers from Nigerian banks over the next 18 months, but expect that within the next 18 months, some level of stability will come into the system, and then the growth numbers can start from 2011.
So, Femi, where we've seen a very cautious approach being taken by investors coming into the Nigerian market scene, you know, pretty much sitting on the sidelines till we see some concrete catalyst emerge for these markets. And what's your outlook for the week ahead as we kick this new week off?
Same thing, Alishia, same, nothing has changed. I think that there's no news that's coming out again. We've seen reaction to some of the numbers from Dangote, Honeywell Flour Mills last week. The reality is that the economy requires a significant push, and that push isn't going to come in the next quarter, because I mean government finances are not exactly in the most buoyant of states. The reality is that investors will continue to look for safety, which means that the bond markets will continue to thrive, given the sort of yields that we're getting from those markets, and that is negative for the capital market, for the equity markets. I think that for this week we would see flat to slightly down in terms of market performance, but you would see some outliers on the positive side, especially for companies who come up with good numbers. That's my take for the market this week.